What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Tuesday, March 5th. Alright guys, so SPY here today, finishing the day down 55 cents a share, minus 0.11%. You know, a volatile day, but essentially a flat day. We got this late day upside move and then kind of big fade into the close, finishing the day essentially flat. Listen, the ETF is down, I don't know, 60, 70 cents here after hours. As always, you'll hear me say this a lot. Take after hours movement always with a grain of salt. There's one exception. The only exception in my head is if for some reason, this is typically like on an earnings event or something, big news catalyst after hours. If for some reason volume after hours meets or exceeds the volume intraday, then it's time to take that as more of a definitive move. 99% of the time, volume is incredibly low after hours, so we have to take it with a grain of salt because the sample size is so minimal. Well, let's take a look here today and go through our daily ritual. Let's try to pull out as much bias as we can from today's trading day, the options traders, and take a look at some psychological self-fulfilling prophecy levels that I'm paying close attention to as we head into tomorrow's trading day. So let's start here with our volume profile analysis here on the 5-minute chart like we do every single day. Now, you guys know what I'm looking for. I'm looking for, obviously, big variation in volume that correlates with an obvious move in the price of the ETF. I may just say stock because it's easier from here on out. But that needs to be outside of the context of what is typically expected during that day, right? Because if we're looking at off the open, for example, and then you have a bunch of bulls saying, wow, look at that massive green volume off the open, that's contextual though. So what we saw on the S&P today, or on SPY, what's really interesting is we actually got some accelerating volume on this downside move into the close. Now, granted, two things to consider here. After hours, while we do need to take it with a grain of salt, the volume died very quickly, and the after hours move is relatively minimal percentage-wise. Okay. The second thing to consider here is that this wasn't one of those capitulation closes where we close the S&P 2% down on the day, which is a huge day for the S&P. It was kind of a race to close essentially flat, okay? So if you're in chat rooms, you know, Reddit forums, whatever, tonight, and you're looking, you're probably going to see a lot of bears looking at this volume profile heading into the close and saying, wow, you know, we really dominated that close. And they wouldn't necessarily be wrong, bulls. Just understand that. But you need to understand that this is one factor of just many, okay? It's one part of the day, and we've barely even broken the ice in this video. So, both of you guys, bulls and bears, I think it's really, really important. It's easy to look at the things that support your bias, which I'm sure, you know, bulls, it's coming. Bears, it's really easy to look at this and say, I knew I was a bear for a reason. What's not easy to do is to look at everything that we're going to look at here, understand the context of every factor, and then look at your position and say, yeah, I still agree with my position. It's easy to agree with what supports your bias. It's hard to understand the other side of the ball. The other side of the ball, though, is the more important side of the ball. You need to understand the enemy more so than your peers, so to speak. So an interesting volume profile here on SPY today, but listen, again, this is a little bit different as an ETF than a stock. It's actually relatively common. It's not every day, of course, but it's relatively common that we do see like big volume spikes into the close on an ETF like this. It's not so uncommon like if we were looking at like AMD stock or something of that sort. But let's move on here and start taking a look at psychological self-fulfilling prophecy levels that I'm paying extremely close attention to come tomorrow. As you can see here on the 30-minute chart, this is the 50-period moving average, one of the most commonly used, has tons of eyeballs, which is the only reason I'm interested in it, because people tend to make decisions around those levels, don't they? But you can see here that for the last few trading days, we've been respecting that 50 period as a support level and then gave it up just barely at the close here today. So bulls, what I'm looking at on the market tomorrow, I would ideally love to see a reclaim of that 50 period here on the 30-minute chart, which is approximately 0.16% away to the upside. A reclaim, a bust upside through, a retest, and an above average volume pull away, okay, up toward that all-time high that was locked in today of 514.20. Okay, bears, really simple for you guys. Any upside test of that 50 period, you're just going to want to see an above average volume or higher fade back downside. Okay, and ideally a curl over of this 50 period as well to add that, one more psychological barrier that's descending, coming down with the name if that were to end up being the case. Let's move on now here to the 4-hour chart and take a look at this one. You can see this one is a little bit in play, but that 50 period here on the 4-hour chart is currently about 0.73% away to the downside. Again, well within range for a single day move on the S&P, so we do have to take a look at that. Understand that in order to get down there, you have 510, which is likely to be somewhat of a psychological level. We've seen that respected on a variety of trading days already as a resistance, okay? So, we'll get to that on the daily chart. Bulls, listen, any downside test of that 50 period here on the 4-hour chart, going to want to see similar to the 30-minute, again, an above average volume bounce and pull away. Okay, ideally, you wouldn't really want to see a test of that at all. You would just want to see this 50 period continuing upside at an accelerated rate. Like I typically say, getting some feet up underneath that move. Bears, you would want to see this flattening out as much as possible. And any downside test, you want to see a high volume break downside, retest, claim as resistance, which we haven't really seen all that much in a while, and then fade lower. All right, bears, that's what you would be looking for here tomorrow. Now, let's take a look at the most important and the most contextual and the most psychologically crucial chart of all, which is the daily. All right, you can see here that the 50 period moving average, the 50 day, I suppose, that white line is approximately 4.7% away, so I wouldn't say immediately relevant here. But the daily chart always paints the most obvious picture, right? Do not overcomplicate it. It destroys the entire point of why we're looking at TA as a self-fulfilling prophecy. I want to see, okay, what's the story here that has the most eyeballs? And it's almost always the simple story. Bulls. Here's what I'm looking for. Any test of 510, I would love to see 510 claim as a newer support region when we have seen it act as a resistance in the past. That would claim it now on both sides of the ball as an important level, as support and resistance, and it would give us an additional support level between us and $500. Then we could look to use 510 as potentially kind of a trampoline to break up through 515, locking in a new all-time high potentially. Bears. Number one priority here tomorrow, crack downside back below 510. Ideally, you see a retest and a claim as resistance as we have seen a couple of times in the recent past, and a fade lower because bears ultimately, your goal really is to get back down below $500 here on SPY, 5,000 on the S&P, and it's going to take a crack downside of 510 to do it. Now let's move on to, I think, a lot of your guys' favorite part of the video. Let's take a look at the options traders bias. This is all just from today, okay, as we head into tomorrow. How are they positioning themselves? We had 6.7 million total contracts traded. It's a decent sample size. 3.11 million of those were calls, and about 3.6 million of those were puts. So we are seeing a put side bias here on the overall ratio, and if we break it down by time frame, the 0 to 20 delta range, we had 925,000 calls and about 1.48 million puts. We're also seeing a short-term speculator, those gambly style contracts in the very short term on average, right? Far out of the money. We're also seeing a put side bias in that short-term region. But then as you start getting to at the money, in the money, and deep in the money, this is to be expected on the S&P on SPY, you start leaning back toward the call side. All right, because typically you're going to see call side bias as we get to midterm and longer term outlook on SPY, given the history of the stock market. As always, make sure your risk is managed. Of course, the options traders can be wrong. It's just one factor of many. Listen, I'm curious how you guys are playing this. What's your time frame? What's your sentiment right now? Let me know in the comment section down below. Kind of treat this as a community poll. Hope to see you down there. And by the way, hey, if you got value out of this video, please subscribe to the channel. On the way, I appreciate you, and I'll see you in the next one.